Welcome back to Markets Today. I'm your host, Mbithe Mwema. It's the beginning of another week. We are understanding what was happening last week in terms of driving investor sentiment. The Nairobi Securities Exchange has been muted in terms of activity over the last couple of weeks, but there's a possibility that we could see a liquidity event coming up soon. This is on the back of the inclusion of Kuwait into the MSCI Emerging Markets portal in terms of the indices. To help us understand what possibly this impact could have on Kenya, we are joined by Mr. Mwathi Kilonzo, who is the head of sales at EFG Ames. Welcome to the show, Mwathi.
Thank you, Mbithe. Thank you very much for having me.
Okay, before we look at the possible liquidity event that could come from Kuwait, perhaps you can give us an overview of what was happening last week on the NSE. We did see a slight uptick in as far as turnover was concerned. That was up 11.3% on a week-to-week basis. On the flip side, we did see foreign investors selling out some of the key stocks, such as equity and Safaricom. Perhaps you can give us an overview of what was happening last week and what possibly could happen this week. Over to you, Mwathi.
Thank you very much. Look, I think the market of the last few weeks has basically, as you said, characterized by volume that has been unseasonably low. Usually in going into Q4 historically, Kenya is a market where there's a very strong calendar effect. So by that, what I mean is that the strong trading patterns that you see in Q4 into Q1, investors usually pile back into the market. And we're not really seeing that at this point. And we're also seeing volumes fairly depressed. Now, whenever there is some activity, it's concentrated in the liquid names, and those liquid names are Safaricom, Equity, KCB, to a large extent, BAT and EABL occasionally. So I think whenever investors are positioning, those are the names that you'd expect to see some activity. But I think what you are seeing is clearly local investors are a lot more active in fixed income, and that is crowding out investments in equities. For international investors, there's still a bit of uncertainty around, for example, the actual total effect of free money transfers on M-Pesa and therefore on Safaricom revenues. So I think once that telco reports numbers, and then we'll actually have a better idea of how badly they've been impacted. On the banks, there are worries obviously around asset quality and general, slower growth given post-COVID or current COVID conditions. So I think those are the dynamics that are driving the market to a large extent.
All right, thank you so much for that overview, Mwathi. There is a possibility of a slight trigger event in terms of liquidity coming into emerging markets, and that's largely from the possibility, or rather the inclusion of Kuwait into the larger market cap by the MSCI. Please walk us through why the MSCI index and the inclusion of Kuwait into one particular index from another. How does that impact foreign investor sentiment, especially in light of the fact that 65 to 70% of Kenya is traded by the foreigners? Over to you, Mwathi.
Thank you very much. So for those who are aware, the world is very much how people invest is very much dictated by a certain number of indices. And MSCI is one of the largest providers. And there are a lot of funds that are benchmarked, either active or passive. So it could be passive like ETFs and active, actively managed funds. So MSCI has for a long time flagged that Kuwait is due to be upgraded from the Frontier Market Index, which is where Kenya is a member of. And Kuwait was the largest weight constituent of that. And Kuwait is now qualified to be upgraded to the Emerging Markets Index. Emerging Market Index is where you'd find markets like Taiwan and China and Russia, so large markets. Now, within Frontier, obviously, the move, the sort of expulsion of the largest constituent means that there is going to be some rejigging in the index. And Kenya, which currently had a weighting of somewhere around 2.5%, should move up to 3.1%. As Kuwait is removed. This will also trigger some inflows into Kenya as those funds follow that increased weighting. And there will also be other markets where you will see some other weighting. So Vietnam, for example, Morocco. Vietnam and Morocco will become the largest constituents in that market. So they will also have some sort of movement. So these inflows will come into Kenya. We're estimating that's sort of somewhere between 2.5 to 3 times average daily traded value. So there could be a meaningful liquidity event in that. The question is how that money is distributed. Obviously, from from what we can see from our investigations, a lot of funds are very much in Safaricom, but a lot of funds are not in the banks, for example, Equity Bank. So if we did see a meaningful change in the outlook or how people consider Equity Bank, for example, I think that's something where you could see the inflows making a meaningful impact on the trading in that name. So it's a big event. It's one that's going to trigger it's well flagged, so it's a well understood and well known liquidity event. So it's not a surprise. MSCI is very good at being transparent. The question is whether investors will use that opportunity to keep their weighting to Kenya, or they will be underweight, or they will be equal weight. So that's sort of the questions.
Okay, thank you so much for that overview. So you flagged certain percentages. You think that the inclusion of Kenya will move from 2.5% weighting in the Frontier Index to a 3.8% weighting. What does that
3.1.
mean? Sorry, come again?
3.1.
3.1%. Thank you for that correction. So from 2.5 to 3.1% weighting. What does that mean in absolute terms? What does it mean in terms of the market cap? And what does it mean in terms of possible inflows that could come into Kenya? And how does that look vis-a-vis other sub-Saharan African countries such as Nigeria? Over to you, Mwathi.
So it's an interesting question, when you compare against Nigeria. So starting with Kenya. So Kenya, that percentage increase, we think, is around $12 million of inflows. Now, if historically Kenya was a market where you were trading maybe $6 to $8 million a day, but lately that number has come to somewhere around 4 million. So you can see that it's somewhere around 2 to 4 trading days, depending on how liquidity pans out, that we expect as inflows. Nigeria is a very interesting situation because Nigeria, as you know, is a market where there is a huge difficulty in getting dollars out. There's a dollar queue that the central bank runs. There is it's opaque in terms of how much they're actually honoring in terms of spot and forwards. So no one really knows. We've seen people using a variety of ways of getting money out. One of them has been through the new gold ETF from Nigeria and then funding it over to South Africa. So some investors who can do that have taken that opportunity. It's not cheap because you do take a haircut in terms of the implied FX rate. And obviously there are costs as well of doing that transaction. But when you do want to get your money out, sometimes you have to be creative. So because of that difficulty, it creates a situation where Nigeria may seem like a heavyweight. However, because you cannot get your money out, why would you put more money in? So Nigeria is a case where its weighting obviously will change positively, but the odds are very much stacked in that investors will be extremely reticent to put money in. And because of that difficulty, you may find that MSCI may actually cap or reduce the amount that Nigeria increases in that weighting just because of the difficulties with FX. I mean, it's a very unfortunate situation, but I know in the past you've looked at Nigeria as well, so you've known that these are not new issues. These are issues that crop up every few years with Nigeria.
Okay, fantastic. So does that mean that there's a possibility of an added element of inflows into Kenya? Because as you have rightfully said, Nigeria might not get the allocation largely because you can't be able to expatriate your funds. Does this then open up an additional opportunity for a higher level of inflows coming into Kenya once Kuwait is moved into the higher level of the MSCI indices?
Unfortunately, I wish that was the case, but we actually think that Asia will benefit more than Africa. If you look at some of these markets, and in fact, you can even look at how Asian markets have performed in the COVID environment. If you look at liquidity, if you look at markets like Vietnam, if you look at markets like Bangladesh, and even outside the frontier market index, because people are looking at other emerging or smaller emerging markets, such as the Philippines, Indonesia, where markets are very liquid in terms of value traded. There are interesting, capital events happening. There are IPOs. There are, it's a lot more interesting to be in those markets than in Africa. So sadly, even if there is an opportunity for us to cannibalize on what may have gone into Nigeria, Kenya itself isn't necessarily offering the attractiveness that you will find in somewhere like Vietnam. I'll give you, Vietnam is fascinating when you look at it because they have barely been scratched by COVID. If you look at the official statistics, if you look at the results coming out of Vietnamese companies, they're still growing. They're still growing their exports, and the markets have remained resilient. If you look at Bangladesh was a market which was actually closed for quite a large amount of time. And even when they opened, they came with some restrictions on trading, which investors did not like. But still, what you're seeing is retail. And this is one thing that lacks in Nigeria and Kenya is retail participation. In those markets, you're seeing retail, normal investors on the street, very, very active and trading on a daily basis. You see in markets like Kenya, which are more institutionally driven on a domestic and international front, we just don't have those dynamics.
Okay, what makes retail investments quite prominent in markets such as Vietnam? I digress, but it's just interesting. What is it that Vietnam has done that Kenya hasn't done, or what is it that Vietnam has done that Kenya should possibly consider in terms of engaging the retail investors and bringing them on board into the public markets?
So it's a phenomena that we see not just in Vietnam. It's very prominent in Pakistan and in Bangladesh. And I shouldn't even call it a phenomena. It's actually the way that those markets are traditionally traded. However, what you see in those markets is that there are very few local institutional money managers. So Kenya has a lot more formalized industry, and that is a sense of all the large sort of asset managers, whether it's Old Mutual or Britam or ICA, etc. They're all very well known. So those investors are sophisticated and have grown and have growing collective investment schemes. In those other markets, we don't necessarily see such a sophisticated asset management business, but retail, on the other hand, has penetrated quite deeply. And in Kenya, to a large extent, when people talk about retail, they're actually talking about high-end investors, so people with money to trade. Whereas in these other markets, we're talking about very ordinary people. Perhaps it's something to do with gambling. In some of these markets, gambling is very controlled, and so the speculative activity that you find here on gambling platforms there is put in stocks and trading as a retail person. If you're looking to sort of speculate and do something. I mean, Saudi is another market as well, where we've seen retail being very, very strong driver of those markets. But having said that, it's well known in the US through platforms, retail has been very strong through COVID. So it's not just, I think, about gambling. I think it's just the structure of the industry. Perhaps costs may be one thing. Products is another thing. Vietnam has a very developed and sophisticated derivatives market, which has very high volumes. That's something that we are trying to do in Kenya. So, I think derivatives are clearly a way of having a levered investment. So perhaps as that picks up some steam, maybe retail does come back.
Okay, thank you for that. It's interesting just to note the element of gambling being controlled. So in Kenya, it's either you gamble and make a sure bet, or you try to figure out how to get into the exchange. Thank you for that overview. Let me come back now to the case of Kenya. So your estimate is probably $12 million get their way or find their way into investing in Kenya. Before these dollars find their way into investing in Kenya, what's the overall sentiment when we're looking at Kenya today? You've mentioned that the attractiveness of Kenya has been declining over time. In the next 1.5 years or so, we are expecting a general election. There's a possibility of a referendum. How is the investment climate for Kenya looking like today, especially based on the foreign investors that you engage with on a day-to-day basis?
Look, Kenya if you look at Kenya within its peer group in Africa, Kenya actually is a bright spot. So, last week we got GDP numbers and we saw the inevitable slowdown that we expected in Q2 or somewhere around 5.7%. But if you actually drill through those details and you look at the sectors that really dragged the economy, there were things like education. Obviously, schools were closed, so that's not a surprise. It was tourism and hospitality. Again, that's not a surprise. And transport, again, with, control movement and curfews, etc. These are not surprising things to have contracted. But their scale of contraction was enough to actually pull us into negative numbers. But however, if you drill through the numbers, you could see that agriculture in particular was strong. And if you think agriculture is the largest employer of people and is a very key part of the rural economy, and that was strong. And when we look at some of the other mobility data, when we look at things like fuel consumption, we look at electricity consumption, when we look at, so these are high frequency pieces of data that are published monthly by the authorities. So they're easy to look at. We look at mobile money transactions. We can see that there has been a very encouraging recovery and bounce back. So when you look at that, we're thinking Kenya that this year growth would be somewhere between 1 and 1.5%. If you go back a few months back, markets and people were expecting Kenya to grow, to have very negative growth. So I think in the context of Sub-Saharan Africa, Kenya is looking good, and there's some nice stories. However, now when you start drilling into company-specific sort of thoughts, then you start to, you really have some certainty around the NPL issue of the banks, how bad that will be coming out into COVID. We need to have a better understanding of the ability of some of these banks to pay dividends. As you know, Equity Bank, for example, withheld its dividend out of an abundance of caution. And some other banks structured a slightly different dividend. I mean, ABSA, I think, didn't pay a dividend to its parent. Stanchart structures a cash and scrip. So, so we just need to get a better idea of the balance sheets of the banks, and in particular, and how their clients themselves have been faring. And in Safaricom, going back to what I mentioned earlier, we just need to understand how M-Pesa has fared. Now, obviously, everyone is using a lot more digital money to transact. However, it's free. So the banks and Safaricom are not making money off it. So when those are unwound, there is going to be a question of the elasticity of that behavior. So will people, because there's a charge, not use M-Pesa as often as they were using when it was free? So I think those are the dynamics that people really need to understand. And by people, I mean investors. And out of that, then the form of view. So look, we like Kenya. Kenya is within its peer group looking good. There's just a bit of uncertainty. Thankfully, this uncertainty exists in every other market. It's not unique to Kenya. I think everyone is concerned about banks, whether you're looking at US banks or you're looking at Japanese banks or Kenyan or Saudi banks.
Okay, thank you for that overview. Now, when you're trying to just understand who could be the biggest beneficiaries in terms of selective stocks from this inflow of funds once Kuwait moves from the frontier to the emerging market segment, maybe you can just give us an overview of Kenya's standing when it comes to the MSCI frontier market segment. What stocks are there? What's the current weight? You have mentioned that earlier, but you can just give us that brief overview. And what particular stocks are part of the MSCI FM index when it comes to Kenya?
So when you look at this index, it's basically very much based around trading dynamics and liquidity. So in that instance, then it's the big boys. So it's going to be Safaricom, it's going to be Equity Bank, and KCB. I forget who else is in that index, but to a large extent, those three names would be the key weightings in that index. And look, it's natural when you look at the liquidity and how much they trade on a daily basis. So when an investor is very much benchmark driven, then they'll be looking at the names in that index, and they will also be considering liquidity. And by liquidity, it's how many days it will take you to build a position and how many days it will take you to exit that position. That's what people are thinking about. So there are a lot of people who have a $1 million per day liquidity threshold. So, that cuts out a lot of the market. So when it does come to inflows, it's unlikely that will impact a lot smaller names. So, if I look at, for example, the banks, it'd be very, very unusual for a bank like Diamond Trust or I&M Bank to attract, or even NCBA, which is the third largest bank by assets, but trades very little on a daily basis, for those to attract those inflows. Given that, as you mentioned, 60 to 70% of this market is foreign driven. However, if you do start to see inflows driving a sense of more confidence in the market, then what that does is also start to excite the local investor, both institutional and retail. And then that's when you start to see second order effects on the names that are not necessarily MSCI driven. And there's also another investor that we haven't spoken about, and that's the Africa investor. So the Africa investor isn't beholden to MSCI movements. So, they're free to make investment decisions as long as they're investing within their mandate, which is Sub-Saharan Africa. So those are the type of investors who would start to look at the likes of I&M, DTB, NCBA, whether it's BAT Kenya, Centum, etc. And with that investor combined with the local institutional investor who's clearly free to invest in any stock on the market, and retail who are more likely to participate in some of the smaller names, some of the agricultural counters, for example, then you get a lot more excitement in the index and in the market, and then you start to see performance. So I think it's a confidence game. So if the big caps move, then you see more interest in the small caps, which will offer more value. And once people see value, then they'll start looking at some of the smaller, more niche names where there are slightly more exciting but harder to come by prospects.
All right, thank you so much for that, Muathi. We take a short break. When we come back, we continue the conversation on what's the possible liquidity event when it comes to the Nairobi Securities Exchange. We would like to hear your voice as well as hear your prospects of any investment options that you are looking at or any questions that you would like us to answer. Our SMS line is 20146. Alternatively, you could reach out to us. That's at Metropole TV on Twitter, Instagram, or Facebook, or at Mbithemwema on Twitter, Instagram, on Facebook. What are your investment plans? What would you like to know to make that decision that much easier? See you after the break.